Do you think that's a temporary widening or is the start of maybe a regime change?
I think it is a little bit of a start of a new regime change. So you've seen a lot of issuance out of the tech companies, but it's just not about the dollars. It's also where they're issuing. And so a front end of the issuance is actually doing quite well. You take Google, for example. They issued, I think, at 27 basis points for the 3 years. So very tight spread. And now it's trading at 20 basis points over. So there's been a lot of demand for the front end because people know that that's money good. Out the curve, the quality is there, but there's just a lot of weight to it. So there's about 40% of the Google and the Oracle deal that were issued 20 years and longer. And that's very rare. Normally, you're getting these short bonds or spread across the curve. And then Google, obviously, we've been talking about it all week, that they issued 100-year over in sterling. So there's just a lot of weight. And those, they're not the same dollar weight for a 100-year as a 2-year or a 3-year. It just puts a lot more spread duration in your portfolio, makes it a lot whippier. And so in that regard, I think you have to get paid more. And the more they want to issue out the curve, I do think the more pressure it's going to put on spreads, particularly within tech.
Would you consider, Matt, taking on a 100-year risk from a tech company, even a tech company like Alphabet? I mean, we know insurance companies want the duration to match their liabilities.
I love the 100 years. I love the 60 years. Only if you get paid, though. You have to get paid. It has to be a steep curve. If you're getting enough of a curve, enough of a pickup to it, it makes sense. And the reason why is because these are liquid bonds. You're getting paid a lot more, and you can sell them if things change. You really can't forecast a 30-year tech bond anyway. I have no idea what's going to happen in Google in the next month, let alone 5 years or 30 years. But in the instance of the UK sterling bond for Google, it was a 60 basis point spread pickup, but uniquely enough, it was only a 10 basis point yield pickup because the 30-50 gilt curve is heavily inverted because of all the demand from pension plans in the UK. So it's just a really unique thing. But in my opinion, I don't mind it at all because I can sell it, but I got to get paid for it.